Hello everyone, myself Vaibhav. In today's session, we are seeing that the EURUSD has broken below the 1.18 level and it is approaching the 1.175. And I feel that given the slowing of pace of its decline, we are pretty much likely to see more of sideways move rather than straightforward decline in today's session as well as in next couple of sessions. So we will see what are the support levels which we can utilize to look for some scalping opportunities in next couple of sessions. So we will dedicate this session of market movers to take a look on the technical aspects of these possibilities. So let's get started for today's session. If we consider the trading context for the day, we got PCE price index data for the month of February, and for this month, we are seeing that there is a rise in PCE price index, and this is the third consecutive month of the prices going up. And as was the market participants' anticipation, the price pressure is now slowly creeping up, and this is not a good sign, but it has some room to run higher. And this is happening as the demand has substantially picked up in recent months on back of the recovery in economic activity, and as vaccination has picked up pace, we are seeing more and more people are feeling confident enough to go out and spend, and that is increasing the demand for goods and services, and increasingly, resultantly, the price index has gone up. And I think next couple of months we are likely to see it even first it will get closer to the 2%, and eventually it is likely to overshoot the 2% target range as well. And another key data that was also released along with this PCE price index is the income, personal income, and it hasn't really gone up for the month of February. So the income has remained constant, and as the new stimulus bill has been passed, I think for next month, which is the month of March and the subsequent months, we are likely to see the increase in personal income as well as in personal spending. But for the month of February, the personal income didn't really go up. Just in a short while, we are also scheduled to get the US Michigan consumer survey data. And here we will have multiple data points. And the most important one is, of course, the consumer sentiment. And on this front, we are likely to see substantial improvement for the month of March compared to the reading of 76.8 which we had for the month of February. For this month, the expectations are that we might see a reading anywhere closer to 84. The inflation expectations are also likely to go up to 2.75%, and the consumer expectations are also likely to get better. So, on most of these key economic points, we are likely to see improvement happening as the US economy has done well, and that has resulted in people's expectations are also going up. Now let's shift our focus to the technical outlook from the fundamental driving factors which we considered. We will focus this session on Euro USD, and then we will also consider the gold. Let's start with the Euro USD's technical outlook. This is the daily time frame chart, and here I have drawn the Fibonacci expansion of its prior decline, starting closer to 1.225 and extending all the way closer to 1.185. And from those levels, we had this retracement and brief consolidation phase where the price remained pretty much range bound, just a little below 1.20 levels. And in the early part of this week, we had this breakout, and after that, it has been all downhill, and now it has gotten closer to the Fibonacci expansion of around 61.8%, and also we have this prior swing low where we had last kind of pause before the momentum picked up on the buy side. This was the consolidation phase, and then this was the last swing low before the Euro USD rallied all the way towards 1.23. So here now I am expecting this prior price area to act as the near-term support, and with that in mind, we can indeed look forward to some scalping opportunities in Euro USD. Not in today's session per se. We will have to wait for a session or two and see how the price action behaves after getting closer to this support. And only if it respects the support level and it holds above the 1.175, then I think we will have a better chance of making profitable trades rather than jumping straight away while it is still in decline. So moving forward, there's a price range of around 1.175 to 1.180 is going to be crucial. If we consider these technical parameters, the pivot point series, along with the regression curve, both are pointing south, and that's pretty much expected given the steep decline which we have observed in the Euro USD in this month. And resultantly, most of the supports have given way, and we are now seeing Euro USD even below the second support of this month's pivot point series. But as I said, this is not really the time to look for fresh shorting opportunity. That was when we had the consolidation phase around this 1.19 mark. And if any of you had gone in for that trade, even I had talked about this possibility when Euro USD was consolidating then, and the immediate price target was working out closer to 1.18. But now that is of last week, and only takeaway from that is that we always have to keep in mind some key levels. If we have the breakout below or above those levels, then we have a strong probability of the Euro USD, or for that matter any other instrument, moving in the direction of that breakout, and that can bring us good amount of profit. So here also we will have to wait for first consolidation, and then only we will be in position to profit from that. So if we have to look for any trading opportunity in next couple of sessions, I would suggest that you should look for a buy trade instead of a sell trade. And not because the trend has changed in the Euro USD, but if we see some sort of consolidation first, then I think the probability of retracement will go higher, and for that we can utilize this 50 SMA. So allow today's session for the Euro USD price action to give us clarity, and maybe by the time we come back for the trading on Monday, or if the things don't really improve, we can wait it out till Tuesday either. So for next couple of sessions, we will have similar kind of outlook. First, allow the Euro USD to consolidate, and as and when it tries to break above the 50 SMA, that will be the time to get involved for the retracement move on the upside, with possible target coming closer to the 100 SMA. So that opportunity can be exploited as and when it will arise, and all we can do is be ready and jump in whenever the situation looks favorable enough. And the stop loss, I think I forgot to mention the stop loss. The stop loss can be kept just little below the immediate swing low. And given the fact that we will be utilizing the consolidation, and only after that we will be getting involved, the stop loss is not going to be much wider, and the risk reward ratio should be kept above 1:2 to cover the risk, and also to make sure that the mathematical distribution is in our favor regardless of how trade fares. Now moving on to the gold. In yesterday's session I had also talked about the gold, and in today's session things haven't really changed much. The gold has continued to trade in a very narrow range, and right now it is trading closer to the day's low, and I think the formation looks interesting enough. On the longer time frame chart, we have this clear-cut indication of the bearishness of the price momentum. But for last almost 2 weeks, we haven't really seen the gold moving much, and it has remained in a very narrow range. And I think here also we will have to mostly rely on the shorter time frame chart and breakouts, and only with that we can look for making good enough money. We can look for making the profitable trades. So here, if you consider this regression curve, it has sloped higher, but the thing is, the price action has now moved in the lower band of this regression curve. So we will either see a breakout on the lower side and then swift deceleration towards prior swing low, or even below that, the price band of 1700 USD per ounce, or even below that. Or if it doesn't really break below the support, then I think like the swift move which we saw in yesterday's session, that kind of move can't really be ruled out, and we can even see or expect the gold again trying to get closer to the immediate swing high, which is there closer to the US dollar 1750. Right now, if you consider the regression curve, the pivot point series, it is not really in play, as we have these two crucial levels, the central pivot point and the first support, quite far apart from the current price action. And as a result of that, we will mostly have to rely on other technical parameters while making our mind. And to that extent, I feel we can take the help of this confluence area of 50, 100, and 200 SMA, and then these prior swing highs and swing lows can also be used as a decisive marking point for the trading in gold. So if we see that the gold is able to sustain below this prior swing low in today's session, then I think we are pretty much likely to see this decline extending all the way towards US dollar 1700 per ounce mark. But if that doesn't really happen, and if we see that gold is able to climb back on the higher side, and if it sustains above this confluence area of 50, 100, and 200 SMA, then we will have the probability shifting on the upside. So here, both these are possibilities, but for the time being, we will have to allow the price action to bring in clarity, and depending on how the gold moves in the initial hours of US trading session, we will have much more clarity, and accordingly we can look for trades in the gold. So the key levels to watch out for are these prior swing lows, and then on the higher side there is a confluence area of 50, 200, and 100 SMA in this price band of around US dollar 1730 to US dollar 1735. And on the lower side we have these support coming into play in the price band of US dollar 1722 per ounce to US dollar 1725 per ounce. So these are the price levels I think are going to be the guiding factor in today's session. So that's it from my side for today's session. If any of you have any idea or any query to share, you can write to me in the feedback section, and I would be more than happy to take the discussion forward. Before I sign off, I would also like to remind of the risk associated with trading in the financial instrument, and one should be careful while using the information provided. Have a fabulous day ahead and the weekend. See you on Monday. Till then, goodbye, and don't forget to subscribe to the Goscopy webinar channel. See you next time.